Question 1. Commercial property insurance. A commercial building located in a high-risk flood zone has a standard commercial property policy. The business owner is concerned about the risk of flooding. Which of the following should the business owner do to ensure coverage for flood damage? A. Increase the policy's coverage limits for flood damage. B. Purchase a separate flood insurance policy through the National Flood Insurance Program (NFIP). C. Add a flood endorsement to the commercial property policy. D. Rely on the business interruption coverage for flood-related losses. Answer: B. Purchase a separate flood insurance policy through the National Flood Insurance Program (NFIP). Explanation: flooding is not typically covered under a standard commercial property insurance policy. The National Flood Insurance Program (NFIP) offers flood insurance as a separate policy to protect against this risk. This coverage is crucial for businesses located in flood-prone areas. Therefore, the correct option is B, as it directly addresses the need for specific flood protection, while the others are incorrect. A. Increasing the coverage limits for flood damage will not help, as flood is excluded from standard commercial policies. C. Adding a flood endorsement is also not a solution, as flood coverage cannot be added to most standard property policies through endorsements. D. Business interruption coverage can help with lost income due to a covered event, but it does not cover physical flood damage to the building or its contents. Question 2. Workers' compensation insurance. A manufacturing company in Illinois recently had a worker suffer an on-the-job injury while operating heavy machinery. The company has workers' compensation insurance. Which of the following statements is true regarding the coverage for this incident? A. The company's workers' compensation policy will cover both medical and wage replacement benefits. B. The injured worker must prove the company was at fault before receiving compensation. C. The company's workers' compensation policy only covers medical expenses, not lost wages. D. Workers' compensation does not apply to injuries occurring during regular working hours. Answer: A. The company's workers' compensation policy will cover both medical and wage replacement benefits. Explanation: workers' compensation insurance provides coverage for medical expenses, lost wages, rehabilitation costs, and other related benefits for employees injured on the job regardless of fault. In Illinois, workers' compensation benefits are available even if the employer was not negligent. Therefore, option A is correct, while the others are incorrect. B. Workers' compensation is a no-fault system, meaning the injured employee does not need to prove the employer's fault to receive benefits. C. Workers' compensation policies cover both medical expenses and lost wages, making this option incomplete. D. Workers' compensation applies to injuries that occur during work hours or as a result of work-related duties, not just during regular working hours. Question 3. Scenario-based question. Commercial general liability. Mr. Thompson, the owner of a commercial cleaning business, has a commercial general liability (CGL) policy. While cleaning the floors of a retail store, one of Mr. Thompson's employees accidentally spills cleaning chemicals, causing damage to the store's carpets. The store owner files a claim for damages under Mr. Thompson's CGL policy. Which of the following is the most likely outcome of the claim? A. The claim will be fully covered under the CGL policy's property damage liability coverage. B. The claim will be denied because the CGL policy does not cover damage to property owned by others. C. The claim will be covered under the CGL policy's personal and advertising injury coverage. D. The claim will be denied because the damage was caused by a professional service. Answer: A. The claim will be fully covered under the CGL policy's property damage liability coverage. Explanation: the property damage liability section of a commercial general liability (CGL) policy covers damage to third-party property caused by the insured's business operations. In this scenario, Mr. Thompson's employee accidentally caused damage to the store's carpets while cleaning, which is a clear case of property damage. The CGL policy would provide coverage for the cost to repair or replace the damaged property under property damage liability, while the others are incorrect. B. This statement is incorrect because CGL policies typically cover damage to property owned by others, provided the damage is caused by the insured's operations. C. Personal and advertising injury coverage addresses things like libel, slander, and infringement of advertising rights, not physical damage to property. D. The damage was caused by a work-related accident and not by a professional service, so this is not an exclusion under standard CGL policy. Question 4. Commercial auto insurance. A delivery company operates a fleet of vehicles and purchases a commercial auto insurance policy. One of the company's vehicles is involved in an accident and the driver is at fault, causing significant damage to another vehicle. Which of the following coverage types will pay for the damage to the other vehicle? A. Collision coverage. B. Uninsured underinsured motorist coverage. C. Comprehensive coverage. D. Liability coverage. Answer: D. Liability coverage. Explanation: liability coverage in a commercial auto policy is designed to cover damages to another party's property when the insured is at fault in an accident. This coverage will pay for the damage caused to the other vehicle in this scenario, while the others are incorrect. A. Collision coverage would cover damage to the insured vehicle, not the other vehicle. B. Uninsured underinsured motorist coverage applies when the other party is at fault and either doesn't have insurance or lacks sufficient coverage. C. Comprehensive coverage covers non-collision related damage, e.g. theft, vandalism, not damage to another vehicle in an accident. Question 5. Commercial umbrella excess liability insurance. A small business owner purchases a commercial umbrella insurance policy with a $1 million limit. The business experiences a claim of $800,000 in damages covered by its primary liability insurance. How much additional coverage is provided by the umbrella policy in this scenario? A. $1 million. B. $800,000. C. $200,000. D. $0. Answer: D. $0. Explanation: an umbrella policy provides additional coverage once the primary insurance limits are exhausted. In this scenario, the primary insurance already covers the $800,000 in damages, and the umbrella policy will only apply if the damages exceed the primary policy's limit. Since the damages are below the umbrella policy's limit, no additional coverage is needed or provided by the umbrella policy, while the others are incorrect. A. The umbrella policy applies only after the primary insurance is exhausted. Here is not necessary. B. The umbrella policy does not provide coverage for damages that fall within the primary insurance limit. C. No additional coverage is needed because the primary policy already covers the entire damage. Question 6. Workers' compensation insurance. A worker in a factory in Illinois is injured while performing routine maintenance on a piece of equipment. The worker suffers a serious injury and is unable to return to work for several months. Which of the following is true about the benefits provided under the Illinois workers' compensation policy? A. The worker will receive full wage replacement for the duration of the disability. B. The worker is only entitled to medical benefits and not wage replacement. C. The worker will receive wage replacement, but it will be a percentage of their average weekly wage, not full compensation. D. The worker must seek damages from the employer's general liability insurance policy for compensation. Answer: C. The worker will receive wage replacement, but it will be a percentage of their average weekly wage, not full compensation. Explanation: in Illinois, workers' compensation benefits provide wage replacement, but typically this is a percentage of the worker's average weekly wage, or generally around 66.67%. It does not cover the full wage unless specified in special circumstances. Why the others are incorrect. A. Workers' compensation covers a percentage, not full wage replacement. B. Workers' compensation benefits include both medical treatment and wage replacement, not just medical. D. Workers' compensation provides the benefits of the employer's general liability insurance would not cover this type of injury. Question 7. Cyber liability insurance. A retail business experiences a cyber attack which results in a data breach exposing sensitive customer information. Which of the following expenses would most likely be covered by the business's cyber liability insurance policy? A. The cost to repair the company's reputation through advertising campaigns. B. The cost of investigating the breach, including legal fees. C. The cost of purchasing new computers and software. D. Losses from a decrease in sales due to the breach. Answer: B. The cost of investigating the breach, including legal fees. Explanation: cyber liability insurance covers the financial losses and costs associated with a data breach, including the cost of investigating the incident, notification to affected individuals, and legal fees. These are part of the first-party and third-party coverage provided by a cyber liability policy, while the others are incorrect. A. While reputation management may be a consideration, it is typically not covered by a cyber liability policy. C. Cyber liability insurance does not cover general business expenses such as the purchase of new equipment. D. Loss of sales might result indirectly from a breach, but is typically not covered under cyber liability insurance. Question 8. Insurance fraud. An insured individual knowingly submits a false claim for damages that did not occur in order to receive a payout from their insurance company. What is the potential consequence for this individual under most insurance policies? A. The insurance company may deny the claim and cancel the policy. B. The insured individual will automatically be given a higher premium for the next policy term. C. The individual may face criminal charges and legal penalties for insurance fraud. D. The insurance company will adjust the payout based on the individual's previous claims history. Answer: C. The individual may face criminal charges and legal penalties for insurance fraud. Explanation: submitting false claims for insurance payouts constitutes insurance fraud, which is illegal in most jurisdictions. Individuals found guilty of insurance fraud can face criminal charges, fines, and possible imprisonment. Why the others are incorrect: A. While the claim may be denied and the policy cancelled, criminal charges for fraud are more severe. B. A higher premium is not typically an automatic result of fraudulent behavior, though it may follow in some cases. D. The payout would likely be denied or reduced to zero and criminal action may follow. Question 9. Bonds in commercial insurance. The contractor is required to obtain a surety bond to guarantee that they will complete a construction project on time and according to specifications. Which of the following is true about the surety bond? A. The contractor's insurance policy will cover the bond if they fail to meet the terms of the contract. B. The surety bond guarantees that the contractor will be paid if they complete the project. C. The surety bond provides a financial guarantee that the contractor will meet the contractual obligations, but it can be claimed against the contractor's assets if they default. D. The bond covers all damages that occur during the construction process, regardless of fault. Answer: C. The surety bond provides a financial guarantee that the contractor will meet the contractual obligations, but it can be claimed against the contractor's assets if they default. Explanation: a surety bond is a financial guarantee that ensures the contractor will fulfill their contractual obligations. If the contractor defaults, the bond can be claimed against the contractor's assets or the bond provider to cover the costs of completing the work. Why the others are incorrect: A. The insurance policy does not cover the bond. It is a separate financial instrument. B. The bond does not guarantee payment to the contractor. It guarantees performance. D. The bond covers the contractor's failure to meet the terms, not all damages during the construction process. Question 10. Flood insurance. A homeowner's property in a flood-prone area is damaged by a flood. The homeowner's regular homeowner's insurance policy excludes flood damage. Which of the following actions should the homeowner take to ensure coverage for future flood damage? A. Increase the policy's deductible to lower premiums. B. Purchase a separate flood insurance policy. C. Add an endorsement to the homeowner's policy. D. Rely on the Federal Disaster Assistance Program. Answer: B. Purchase a separate flood insurance policy. Explanation: standard homeowners insurance does not cover flood damage. To be protected from flood-related losses, homeowners must purchase a separate flood insurance policy, typically through the National Flood Insurance Program (NFIP). Why the others are incorrect: A. Increasing the deductible does not address flood coverage. C. A homeowner's policy cannot be endorsed to cover flood damage. D. Federal disaster assistance is not guaranteed and typically comes with restrictions and does not fully replace insurance. Question 11. General liability insurance. A small business faces a lawsuit after a customer slips and falls on its premises. The customer sues for medical expenses and lost wages. Which of the following types of insurance would likely cover the business's legal defense costs and any settlements? A. Commercial auto insurance. B. General liability insurance. C. Workers' compensation insurance. D. Professional liability insurance. Answer: B. General liability insurance. Explanation: general liability insurance provides coverage for bodily injury claims arising from incidents on the business premises, including legal defense and settlement costs. Why the others are incorrect: A. Commercial auto insurance covers vehicles, not accidents on the premises. C. Workers' compensation covers injuries to employees, not customers. D. Professional liability covers errors in professional services, not general premises liability. Question 12. Property insurance coverage. A restaurant has a property insurance policy with a $200,000 limit. A fire causes $250,000 in damages to the restaurant. The policy has a $10,000 deductible and no coinsurance clause. How much will the insurance company pay for the damages? A. $250,000. B. $240,000. C. $200,000. D. $190,000. Answer: B. $240,000. Explanation: the insurance company will pay the total damage minus the deductible. Since there is no coinsurance clause, the payout is straightforward. Amount equals all damage. Deductible equals $250,000. 10,000 under 40,000. Thus, the insurance company will pay $240,000, while the others are incorrect. A. The deductible must be subtracted from the payout. C. The policy limit does not restrict the payout because the damages are within the limit. D. The correct payout after the deductible is $240,000, not $190,000. Question 13. Insurance adjuster. An insurance adjuster is evaluating the damages to a homeowner's property following a windstorm. The adjuster estimates that the repair cost for the property is $50,000, but the homeowner's policy has a $5,000 deductible. How much will the homeowner receive from the insurance company? A. $50,000. B. $45,000. C. $5,000. D. $55,000. Answer: B. $45,000. Explanation: the homeowner will receive the total repair cost minus the deductible. Since the deductible is $5,000, the payout will be 50,000. 5,000 equals to 5,000. Thus, the homeowner will receive $45,000, while the others are incorrect. A. The deductible reduces the payout. C. The deductible is not the payout amount. D. The payout is reduced by the deductible, so it cannot be more than the repair cost minus $5,000. Question 14. Professional liability insurance. A doctor is sued for malpractice after a patient alleges that improper medical treatment caused harm. Which of the following types of insurance would provide coverage for the doctor's legal defense in any potential settlement or award? A. Commercial property insurance. B. Professional liability insurance. C. General liability insurance. D. Workers' compensation insurance. Answer: B. Professional liability insurance. Explanation: professional liability insurance, also known as malpractice insurance for healthcare professionals, provides coverage for legal defense and settlements arising from allegations of professional negligence, while the others are incorrect. A. Commercial property insurance covers property damage, not professional liability. C. General liability insurance covers premises and bodily injury claims, not professional negligence. D. Workers' compensation insurance covers injuries to employees, not malpractice claims. Question 15. Business interruption insurance. A business experiences a fire that forces it to shut down for several weeks while repairs are made. Which type of insurance would cover the loss of income during this period? A. Property insurance. B. Business interruption insurance. C. Commercial auto insurance. D. General liability insurance. Answer: B. Business interruption insurance. Explanation: business interruption insurance covers lost income when a business is forced to close due to a covered peril such as a fire. It compensates for the revenue the business would have earned during the closure, while the others are incorrect. A. Property insurance covers the physical damage, not lost income. C. Commercial auto insurance covers vehicles, not business income. D. General liability insurance covers liability claims, not income loss. Question 16. Life insurance beneficiaries. A life insurance policyholder names their spouse as the primary beneficiary and their children as contingent beneficiaries. If the spouse dies before the policyholder, who will receive the death benefit? A. The children. B. The spouse's estate. C. The contingent beneficiaries. D. The primary beneficiary if they are alive. Answer: A. The children. Explanation: if the primary beneficiary, the spouse, dies before the policyholder, the contingent beneficiaries, the children, will receive the death benefit as they are the next in line, while the others are incorrect. B. The spouse's estate will not receive the benefit unless specified. C. The contingent beneficiaries only receive the benefit if the primary beneficiary is deceased. D. The primary beneficiary must be alive to receive the benefit. Question 17. Claims made versus occurrence policies. Which of the following best describes a claims made policy in commercial insurance? A. The policy covers any claim made during the policy period, regardless of when the incident occurred. B. The policy covers claims arising only from incidents that occurred during the policy period. C. The policy covers claims for incidents that occurred before the policy was in effect, but only if the claim is made within the policy period. D. The policy covers all claims made during the policy period, even for incidents that occur after the policy ends. Answer: C. The policy covers claims for incidents that occurred before the policy was in effect, but only if the claim is made within the policy period. Explanation: a claims-made policy covers claims made during the policy period, but it also applies to incidents that happened before the policy was in effect, as long as the claim is filed while the policy is active. This is known as retroactive coverage. why the others are incorrect. A. Claims-made policies do not cover incidents that occurred outside of the retroactive period. B. This is true for occurrence policies, not claims-made policies. D. A claims-made policy only covers claims filed during the policy period, not after it ends. Question 18. Health insurance marketplace. Which of the following is true about health insurance purchased through the health insurance marketplace? A. Coverage is guaranteed regardless of the applicant's health status. B. The coverage provided is limited to emergency medical care only. C. The applicant must pass a health screening to be eligible. D. Health insurance purchased through the marketplace does not qualify for government subsidies. Answer. A. Coverage is guaranteed regardless of the applicant's health status. Explanation. The health insurance marketplace guarantees coverage for all applicants, regardless of their health status or pre-existing conditions, while the others are incorrect. B. The marketplace provides comprehensive health coverage, not just emergency care. C. No health screening is required for marketplace insurance. D. Health insurance purchased through the marketplace can qualify for subsidies based on income. Question 19. Exclusions in health insurance. Which of the following is a common exclusion in most health insurance policies? A. Emergency care. B. Prescription medications. C. Cosmetic surgery. D. Preventive care. Answer. C. Cosmetic surgery. Explanation. Cosmetic surgery is typically excluded from most health insurance policies unless it is medically necessary due to injury or illness, while the others are incorrect. A. Emergency care is usually covered. B. Prescription medications are often covered under most health plans. D. Preventive care is generally covered under the Affordable Care Act. Question 20. Workers' compensation claims. An employee in a manufacturing plant injures their back while lifting a heavy object during their shift. Which of the following actions should the employer take to ensure proper handling of the workers' compensation claim? A. File the claim with the general liability insurer. B. Direct the employee to file the claim with their private health insurance. C. File the claim with the workers' compensation insurer. D. Dispute the claim, as lifting heavy objects is part of the job. Answer. C. File the claim with the workers' compensation insurer. Explanation. Workers' compensation insurance is specifically designed to cover injuries that occur in the workplace. The employer should file the claim with their workers' compensation insurer to ensure the employee receives appropriate benefits, while the others are incorrect. A. General liability insurance does not cover employee injuries. B. Workers' compensation is the primary coverage for work-related injuries, not health insurance. D. Disputing the claim is not advisable unless there is clear evidence of misconduct, as workplace injuries are generally covered by workers' compensation. Question 21. Term life insurance. A policyholder purchases a 20-year term life insurance policy with a $500,000 death benefit. After 15 years, the policyholder wants to extend the policy. Which of the following is true regarding the extension of the term life insurance policy? A. The policyholder must undergo a new medical exam and may face higher premiums based on their current health status. B. The policyholder can extend the policy without an additional medical exam and the premiums will remain the same. C. The policyholder can extend the policy, but only for another 5 years. D. The death benefit will automatically increase, but the premium will remain the same. Answer. A. The policyholder must undergo a new medical exam and may face higher premiums based on their current health status. Explanation. When extending a term life insurance policy, the insurer typically requires a new medical exam, and the premiums may increase depending on the policyholder's current health status, while the others are incorrect. B. Policies generally require a new medical exam for extension. C. The extension period depends on the insurer's terms, not a fixed 5 years. D. The death benefit usually does not increase unless the policyholder opts for a new policy or riders. Question 22. Liability insurance. A company is sued for causing property damage to a neighbor's building while performing construction work. Which type of insurance would most likely cover this claim? A. Workers' compensation insurance. B. Professional liability insurance. C. General liability insurance. D. Commercial auto insurance. Answer. C. General liability insurance. Explanation. General liability insurance covers third-party property damage and bodily injury claims arising from the business's operations, including construction work, while the others are incorrect. A. Workers' compensation covers employee injuries, not third-party property damage. B. Professional liability insurance covers negligence in professional services, not property damage. D. Commercial auto insurance covers vehicle-related incidents, not construction-related property damage. Question 23. Homeowners insurance. A homeowner's insurance policy covers a fire that damages their house but does not cover the loss of their personal belongings inside. Which of the following is the most likely reason for this exclusion? A. The policy has a separate deductible for personal property damage. B. The homeowner needs a flood insurance policy to cover personal belongings. C. The homeowner's policy includes a personal property exclusion. D. The homeowner needs a rider for personal property coverage. Answer C. The homeowner's policy includes a personal property exclusion. Explanation. Some homeowner policies exclude personal property coverage unless specifically added through a rider or endorsement. This may happen if the homeowner's policy is designed to cover only the physical structure of the home, not its contents, while the others are incorrect. A. The deductible applies to all covered damages, not just personal property. B. Flood insurance covers flood-related damage, not personal property exclusions. D. The homeowner may need an endorsement, but the question implies a pre-existing exclusion. Question 24. Disability insurance. An employee becomes disabled due to an accident that occurs outside of work and is unable to work for several months. Which type of insurance would provide income replacement during this period? A. Workers' compensation insurance. B. Short-term disability insurance. C. Long-term disability insurance. D. Health insurance. Answer. B. Short-term disability insurance. Explanation. Short-term disability insurance provides income replacement for workers who are temporarily unable to work due to illness or injury that is not work-related, while the others are incorrect. A. Workers' compensation only covers injuries that occur at work. C. Long-term disability insurance covers longer periods of disability, but short-term disability is more appropriate for the initial months. D. Health insurance covers medical treatment, not income replacement during disability. Question 25. Insurance policy exclusions. Which of the following is typically excluded from a standard homeowner's insurance policy? A. Fire damage. B. Theft. C. Earthquake damage. D. Water damage from a burst pipe. Answer C. Earthquake damage. Explanation. Standard homeowners insurance policies typically exclude coverage for earthquake damage. Homeowners must purchase separate earthquake coverage if they live in an area prone to earthquakes, while the others are incorrect. A. Fire damage is generally covered under homeowners policies. B. Theft is usually covered under most homeowners policies. D. Water damage from a burst pipe is typically covered if it's accidental. Question 26. Umbrella insurance. Which of the following is the primary benefit of purchasing an umbrella insurance policy? A. It covers only auto accidents. B. It provides additional coverage beyond the limits of other policies like homeowners and auto. C. It replaces the need for standard liability insurance. D. It covers business-related liability claims. Answer. B. It provides additional coverage beyond the limits of other policies like homeowners and auto. Explanation. Umbrella insurance is designed to provide extra coverage above and beyond the limits of a policyholder's homeowners, auto, or other personal insurance policies, while the others are incorrect. A. Umbrella insurance covers broader liability claims, not just auto accidents. C. Umbrella insurance supplements, not replaces, standard liability coverage. D. Umbrella insurance typically covers personal liability, not business liability. Question 27. Auto insurance coverage. A driver is involved in an accident where the other driver is at fault and does not have insurance. Which type of auto insurance would provide coverage for the damages in this scenario? A. Comprehensive coverage. B. Collision coverage. C. Uninsured motorist coverage. D. Liability coverage. Answer C. Uninsured motorist coverage. Explanation. Uninsured motorist coverage provides protection when the policyholder is involved in an accident with a driver who does not have insurance or enough insurance to cover the damages, while the others are incorrect. A. Comprehensive coverage protects against non-collision incidents, not uninsured drivers. B. Collision coverage pays for damage to the policyholder's car regardless of fault, but does not address the other driver's lack of insurance. D. Liability coverage covers the policyholder's responsibility to others, not the other driver's insurance status. Question 20. Reinsurance. A reinsurance company agrees to assume a portion of an insurance company's risk in exchange for a premium. What is the primary benefit of reinsurance to the insurance company? A. It allows the insurance company to avoid paying out any claims. B. It reduces the insurance company's exposure to large losses. C. It guarantees the insurance company a profit. D. It allows the insurance company to raise premiums for policyholders. Answer B. It reduces the insurance company's exposure to large losses. Explanation: reinsurance helps insurance companies mitigate their exposure to large or catastrophic losses by transferring part of their risk to another insurer. Why the others are incorrect. A. Reinsurance does not eliminate the need for the insurance company to pay claims. C. Reinsurance reduces risk but does not guarantee a profit. D. Reinsurance may help the insurer maintain stability but does not directly allow for premium increases. Question 29. Health insurance and pre-existing conditions are under the Affordable Character Cap. Health insurance providers are prohibited from denying coverage based on which of the following? A. Pre-existing conditions. B. Smoking history. C. Age. D. Gender. Answer A. Pre-existing conditions. Explanation: the ACA prohibits health insurers from denying coverage or charging higher premiums based on pre-existing conditions, while the others are incorrect. B. Smoking history can affect premiums but does not result in denial of coverage. C. Age cannot be used as a factor to deny coverage, but premiums can vary by age. D. Gender is not a reason for denial under the ACA, though it may affect premium rates. Question 30. Insurance premiums and insurance company uses underwriting criteria such as age, health, and occupation to determine the premiums for a life insurance policy. What is the purpose of underwriting in insurance? A. To assess the risk of insuring the individual and set appropriate premiums. B. To evaluate whether the individual is eligible for any government subsidies. C. To make sure the individual complies with state regulations. D. To increase the insurance company's profits by denying claims. Answer A. To assess the risk of insuring the individual and set appropriate premiums. Explanation: underwriting helps the insurance company assess the risk of insuring a person and to determine the premiums that reflect the individual's risk level. Why the others are incorrect. B. Subsidies are generally assessed by government programs, not insurers. C. Compliance with state regulations is separate from the underwriting process. D. Underwriting aims to properly assess risk, not deny claims.